what's up guys? It's Ezekiel here. So, you know something? Most people are using the technical analysis the wrong way, right? So they think that it's just about spotting support and resistance level and breakouts, right? But there is so much more to it. So in this video, I'm going to show you my technical analysis method that works for all types of trends, right? Whether it's in an uptrend, a downtrend, or sideways, right? And I will show you how to avoid entering too late, trading against the trend, or entering on a false break. And not just that, right? You will also learn how to trade successfully. So meaning to say that big profits and staying consistent in the long run. If you are not using technical analysis the right way, you are basically like trading blind. In reality, most traders are, whether they know it or not. So, for example, right, you pull out a chart and it's a mess, right? There could be candles everywhere, indicators flashing non-stop at the bottom, at the top, right? Price jumping around. So, like, what are you even looking at? Right, so I used to do that, right? I used to load up my charts with like every indicator that I found, right? Whether it's RSI, the MACD, the moving averages, the support and resistance level, etc. Right? You name it, I probably place it there, right? And I thought, right, the more tools I have, that will equals what? Better decision making. But in reality, more tools equates more confusion, right? So here's the truth. More indicators doesn't make you a better trader. Understanding price action does that, right? So keeping your charts simple will help you see things more clearly, right? And make decisions in a way more confidently, right? Because there's no longer a lot of conflicting stuff anymore, right? So sometimes the best and the simplest strategies are the most effective ones. Market structure, which is the foundation of every trade that you take. I mean, forget about all the fancy jargon. Trading is all about patterns, right? And the market only moves in three ways. Yeah, just three ways. So what are they? The uptrend, right? Which means what? Higher highs, higher lows. And that means what? That the buyers are in control. So when the buyers are in control, that equals to you look for what? Buying setups, right? So number two, a downtrend. A downtrend is what? Lower highs, lower lows. So that means what? The sellers are now in control. Sellers are in control, right? So what? We look for selling setups, right? And the third one, range, right? Which is a sideways movement. So that means what? That means there is a lot of indecision in the market. So that's where you can play the support and the resistance level carefully, right? So here's the deal, right? You cannot trade every market the same way, right? If you are trying to short a strong uptrend, you're fighting against the momentum. If you are trying to buy randomly in a downtrend, I mean, that's asking for trouble, right? So before placing any trade, you gotta like take a step back and you ask yourself, where are we, right? Is it an uptrend? Is it a downtrend? Or is the market right now stuck in a range? So once you know that, your strategy will now becomes crystal clear. Let's start with the uptrend market. An uptrend isn't just higher highs and higher lows. What it is behind that, it is the market pushing forward, right? It is the market refusing to drop, right? So, and that is constantly gaining ground, right? So if price keeps making new highs without breaking down, that's what? That is strength, right? That's an uptrend. And if you're trying to fight against it, it's gonna be a big mistake. So now let's take a look at this example. So think of it as the market what? They're like what? They're like climbing up a staircase, right? Climbing up a staircase. Taking each step is taking you to a new level. So instead of going down, the market and the steps keeps going up higher. So that's an uptrend, right? So now let me ask you something. When the market is going up, should you be buying or selling? And there will be, and that's not wrong, but there will be a lot of people wanting to say that, oh, because of this, that, and that, we should probably be selling. Yeah, I mean, I hear you, but take a second to think about it. The logical answer is that you want to be a buyer. Why? Because when the market is in an uptrend, it is more likely to continue moving forward. And as a buyer, you want to ride that wave and take advantage of the bigger potential profits. In an uptrend, the market is not just drifting higher, it's pushing what? It's pushing with momentum, right? The buyers are in control and price is more likely to keep climbing. So now, can you sell in an uptrend? Yes, right? But you'll be fighting against the trend, right? You are what? You are pretty much chasing all the short-lived, short-term pullbacks, and you are essentially stacking the odds against yourself. So like, it's not that you cannot do it, right? But why make trading harder than it needs to be? If the market is going up, your job is simple. Find the best buying spots and ride the momentum, right? Trading is not about being like, oh, I got to be right 100% of the time. No, it is about playing the highest probability moves. So in an uptrend, that means buying, right? Not fighting it, right? So fighting the market is like you're trying to swim against a rip current, right? You're gonna exhaust yourself, right? But when you go with the flow, now you are swimming, right? Your win rate goes up higher. Get it? So simple rule of the thumb. It's not a 100% rule, but a simple rule. Don't chase reversals. Ride the momentum. That's where the real money is. Right? So the same rules applies for a downtrend as well, just vice versa. So a range-bound market, it occurs when price is stuck between what? A high point and a low point. So it's moving up and down within a certain range, but not breaking out yet. The market isn't just like randomly bouncing in between the support and resistance level. It is what? Building pressure. It is also like a coil spring that is getting ready. Most traders think that, okay, it's as simple as what? Okay, buy at the support and sell at the resistance, right? But that's where they could potentially get trapped, because not every support is worth buying and not every resistance obviously is worth selling, right? So you need to know when the market is likely to break out so that you know when it's actually safe to trade within the range itself instead of blindly entering at every time it touches the support or resistance level. So what? We look for what? Signs of exhaustion, breakouts, volume shifting, right? That's where the real edge is, right? So in other words, I don't simply buy or sell over here, right? So I don't make this kind of moves without a plan, and you shouldn't either, right? So instead, what I do is I carefully choose which direction to trade. So I do it more thoughtfully and obviously like more strategic, right? So sometimes I might feel, say, okay, I don't feel comfortable buying at the support level. So what I'm trying to say is that it all depends on the situation. It's about you being adaptable, right? The market is always going to be different. So that's why you gotta be flexible, right? Flexibility is the key in trading. Once you understand where the trend is, let's zoom down to getting our entries. You don't want to buy or sell at random points, right? You need to enter where price is likely to react from there. In an uptrend, where should you buy or sell on the chart? A simple but yet powerful strategy is to use the support and resistance level. I mean, you don't have to bother about all the complicated definitions. Support is what? Support is the market safety net, right? That is where the buyers, they step in, they catch the falling prices and they send it back up. So it's like a basketball, right? The basketball hits the support, hits the floor, and it bounces off the floor, right? That is the support in action. So the resistance is the opposite, right? It's like a what? It's like your ceiling. Price jumps up, hits the ceiling, right? And then cannot break through, right? You cannot break through the ceiling, right? The sellers take control and then price comes back down, right? So now let's apply this in an example, right? So if the market is in an uptrend, we don't just want to buy anywhere. Oh, it's an uptrend, I just go and buy, right? No. We want a good entry, a smart entry. So where is the best spot, right? So we look for support, the level where the buyers are now stepping in, right? Pushing the price higher. But the thing or the mistake that most traders they make is what? They draw random lines on their charts. They got a lot of lines and they hope for the best. I think this line is gonna work. I think that line is gonna work. No. Instead, find where price have actually respected or bounced before, that increases your probability. So if buyers have defended that level once, there is a jolly well good chance that they're going to do it again, right? So keep it simple, right? Wait for price to pull back to the zone, confirm that the buyers are still in control, and then you take a trade. Alright, so this is how you're able to enter with confidence instead of just randomly chasing. So now, if you look at the chart, you want to find areas where price have previously bounced higher. These are the spots for support. If you notice that the markets has bounced off the support twice, right? So this is an area of support that you want to pay attention to now. If you notice that price bounced off higher from this low to where it is now currently, you don't need to have hundreds of lines, right? It doesn't make you a better trader. So here's what actually works. Like what I said before, you focus on what? The last two bounce points, okay? So if price have reacted there before, chances are it will again, right? So mark only the key support and resistance level that truly matters. Because when you have fewer lines, it means what? Clearer decision. So now trading is about stacking all these odds in your favor. So keep it simple, right? Keep it simple and trust the level that price respects. The question that I get all the time is like, hey, Ezekiel, alright, so when do I actually buy or when should I sell? Right, here's the thing. And the truth is, timing is everything. If you get in on a trade too early, you could be stuck in a losing trade. If you get in too late, you already miss the move. Alright, so that's where candlestick patterns come in. Okay, so you think of them as the market way, like giving you a hint, like a clue about its next move. Right, so I'm going to give you two of the most important candlestick patterns. Obviously, there are a lot out there. I'm going to give you in this video two, right, which are the hammer and the shooting star. Alright, so let's start with the hammer. Right, the hammer is like the market. It took a punch, hit the floor, but it got back up strong. Right, so when you see this pattern at the right spot, it's your cue that the buyers are stepping in. So when the sellers try to crush the price to bring it down, the buyers fought back and took control. So that's where you get a hammer candle, where it has a clear sign of rejection, where price dips and then price snaps back up and close higher than it opened. Right, so this is not just a candle. This entire thing is a battle that is won by the buyers. Alright, so now just because you know that okay, now there's a hammer, right? You don't just jump in blindly every time you see a hammer, right? A hammer means nothing if the market structure is not right. So you want to always take a step back. What is the trend right now? Is the trend in your favor? Is price at a key level, for example at support resistance level, right? If everything lines up, that hammer appearing there is not just a pattern anymore. It is now your goal line, your goal sign to enter on the next candle for it to hit up potentially. Alright, so now the opposite is a shooting star. So the shooting star is what? Is the opposite, right? Price goes up, then the sellers bring it back down and slam it back down below. So it's a clear sign of rejection. So same thing, you don't just enter blindly. You want to find it at the right spot with key resistance level, for example, right? That's where it matters. All right, get it? So now, the hammer and the shooting star, they are great, powerful tools for you to determine when to buy and sell as an added confirmation. The false break kills a lot of traders. So now, why not we have a false break trading setup? Okay, so a false break, I'm not talking about candlestick pattern. This is a price pattern. Right, so here's what happens, and here's what really matters. Price drops to the support, it bounces up, and then it comes back down. This time around, it went and go and dip below the support. Okay, so it makes traders think that, oh, it's breaking out, it's breaking downwards already, right? So the panic selling comes in, right? And then what? Price snaps back up. This is a false break, right? So this is a trap for all the impatient sellers, and it becomes the perfect entry point for smart traders to what? To buy, right? It's the market way of taking weakness before ripping up higher. So when you spot this, okay, you're not, oh, it's going to make up, oh, what should I do? No, you're no longer reacting. You have actually positioned yourself. This is what? This is a setup. You position yourself for the real move. All right? So now I'm going to put all of this together in a trade in a while. All right? So one more thing you got to learn is how to exit your trade. All right? So now the other thing that is more important than your entry is your exit. A perfect entry, it means nothing if you do not know when to get out. Right? If you do not know when to get out. Alright, so first one, stop loss is also a way of getting out. People always think, okay, the take profit is very important, but stop loss is also very important, right? Stop loss is when you gotta exit when you are wrong. You are not right all the time, right? You exit when you are wrong. You are wrong, right? So stop loss is not just like a random safety net, right? It's telling you, your stop loss tells you, if price, and it should be, if price reaches that level, then my trading idea that I had at that point is no longer valid, right? So now, where do you place your stop loss? You don't place it too tightly, but you also don't want to place it too loosely, right? So that you got a bad risk to reward ratio, right? So what you can do is to, number one, place it outside the key support or resistance zones, right? Not right on them, because what? All the market noises will potentially take you out, right? So make sure if price hits your stop loss, it means that your entire trading idea, your entire trading setup is now proven wrong. It's not just like a temporary thing. No, the next one. Apart from stop loss, that's where you want to aim for your take profit, right? So that's where you want to exit when you are right? So most traders, sometimes they get too greedy, right? Oh, I'm going to place my take profit at the absolute highest point. I'm going to squeeze out every single pip out of the market, right? They want the absolute top of every move. But what happens? They only to watch the market goes up, profit, and then to vanish when price reverses without hitting their take profit target. Alright, so now, here's a better way, alright? A smarter way to do it. If you are buying, you exit just below the resistance level, right? Before the sellers jump in at the resistance point. Alright? If you are selling, you want to exit just above the support level before the buyers, they push it back up. Okay, now the third one. If you are riding a trend, you can trail your stop loss behind certain structures, which I'm going to show you in a while. And then you let the market decide when, okay, the uptrend is down, the downtrend is done, right? So the key player in the market is the market. It's not you. It's not like I decided to be here, it's going to be there. No, right? You got to understand all these market zones itself. Next, and here's what you have been waiting for. Let's put it all together now into a trade. All right, so now let's look at this chart. What's the first thing that it stands out? Price is what? Is constantly making what? Higher highs, right? And higher lows. So this is in a what trend? In an uptrend, right? Simple, straightforward, right? There's nothing to overcomplicate. So the market is telling you what? It's going up. So what is your job? You got to find what? Find smart entry points and not to fight against the trend, correct? So now that's the starting point, right? So now we know what we're trying to do now. We're trying to buy. So then next, area of value. So we don't want to chase price. Okay, we got to buy here, buy there before it keeps going up, right? So we wait for price to come to us, right? So in an uptrend, that means what? Buying at the best possible spots, all right? So for example, what is a possible spot is the support level, right? It's a support level. We wait for price to pull back to an area where the buyers have already shown strength, right? So that's where the real opportunity is, right? Price came down to the support, right? And then we saw a beautiful reversal candlestick pattern here. Now, I didn't talk about that. It's not a hammer or shooting star, right? This is another one. It's a what? It's a classic what? It's a false break, right? So then what we are doing, price dips below the support, it shakes out all the weak hands over there, people who are selling and that kind of thing, right? And then snaps back up, right? It becomes a trap, right? It becomes a trap. Oh, fake out, a lot of people get stopped out. No, this becomes a what? False breakout set up, right? So what? Here's the entry point. Most traders, what they could potentially do, okay, let's wait for a confirmation, right? But what we do is in a better way. Instead of chasing the momentum, we already anticipated it, right? So here's what. This is your entry point. And then you enter when the next candle open, right? There's no complication of this thing. Now, that's where we enter the trade with all this information on hand already. Right? So now next, exit. a lot of traders, they wait too long, right? They want the perfect highest point, the peak of the mountain, right? Like what I said, right? So what? No, we exit what? Before the crowd realizes it's kind of time to sell, right? So we want to lock in profits while the demand is still strong. So what will be a good or smart take profit target? Right before the resistance level, right? Not at the top, not after confirmation, right? We secure the gains when others are hesitating already. Let's see. Okay, now the market fills your order, right? The market again goes into your favor until what? It doesn't. So here's what happened. And this is usually what happens when you are entering a trade. You enter the trade, the market goes up, oh, that's great. And then all of a sudden, boom, a pullback. And all of a sudden, right, you'll be like, all your profits that you had earlier started shrinking. And that's where a lot of traders, what? They panic. They close their trade right away, right? And then what? They sabotage the entire trading plan itself. But no. That's not you, right? You had a plan, you had an entry plan, you had a stop loss plan, you had a take profit target plan. So the plan is not meant to be what? Oh, you abandon the plan when there's a little bit of hesitation in the market. No, your stop loss is there for a reason, right? It's not just like some random number, some random place that you place. It is a calculated spot, right, where you have given the trade space to breathe. So the market will test your patience. The market might dip, the market might fake out, the market might even tap the support level again before continuing in your favor, okay? And that's normal, So what is not normal is that you bail out at a point where you feel uncertain, all right? So stick to your setup, trust your risk management, and let the trade play its way outwards. Okay, so now let's see what happens next. Right, so now after the market moves, it allows you to close the trade with a good profit. Right, so that's how it's all put together. Right, so it is a simple and effective way. Right, but more importantly, it gives you a clear plan for every trade itself. Okay, so now let me show you another example in a ranging market. All right, so when the market is stuck in a range, most traders, they mindlessly, they buy the support and sell the resistance, like what we talk about, right? When everybody does that, it rarely leads to an edge in the market. So instead of blindly following the crowd, oh, buy the support, sell the resistance, right? Ask yourself, who is trapped? If the support keeps holding, right, and the buyers are piling in, but price it struggles to break higher, here's what happens. The sellers will now smell like a shark, like that. They smell blood. That's when you wait for the breakdown, not the bounce of the support. You wait for the breakdown. So the same goes for resistance. If price keeps rejecting and the sellers cannot push it lower, a breakout is brewing to happen. Forget all the textbook rules. Like, you want to focus who is caught on the wrong side, and then you trade against them. Take a look at this example. If this is a 4-hour time frame, I'm going to go up to the daily time frame. So on the daily time frame, the market is in an uptrend. It's in a long-term uptrend, right? That's what you need to know. So that means what? On the lower time frame, on the smaller time frame, it is what? It's better to look for what opportunities? Buying opportunities at support level, right? So in an uptrend, when you buy the support, it increases the chances of it breaking through the resistance, right? So now, when we go back to the 4-hour chart, the market is still in what? In a range. Right, so we want to see and look at and focus on the support level to trade, right? So the next thing is we want to wait for price to come to the support, right? So when price comes to the support, we want to be patient. So here's where it gets interesting. The market reaches the support level and the next candle drops below it. Now, a lot of traders will think that, oh no, now the support is breaking, let's short the market. But what happens next? We see that price shows signs of reversal, and that's what we call a false break. So what does this mean for us? This is money. It is a valid false break, right? A price took out the low, it reversed, it closed back above the support. For those of you who are familiar with this candlestick pattern, what pattern is this? Yeah, it's a bullish engulfing pattern, right? So that's good enough, right? So price, the candle has engulfed the previous candle, wraps up the previous candle, the red candle. So what do we do now? We can now go long what? On the next bar itself. And then for our stop loss, we can use 1 ATR. Alright, so if you're not familiar with it, watch my ATR video. Alright, ATR. So your stop loss will be placed around here. Alright, so now let's talk about our take profit target. Since the market in the higher time frame shows an uptrend, taking profit before the market hits any major resistance level is important, right? Because once it hits resistance, likely it's going to drop. So we want to take profit before it hits any resistance. We're going to use the principle that we talked about earlier, right? We want to exit the trade before the opposing pressure comes in, right? So that's where we place our take profit target there. Okay, now here's the next thing. Hey Ezekiel, what if the market keeps going up? Right, so if the market is trending up, when the market is going there and the market is showing signs that it's trending up, let's not lock ourselves in just a fixed exit point, right? The key is to stay in the trend when the trade is working out for you, right? So that's where your trailing stop loss would come in. All right, so now instead of having a fixed stop or fixed take profit target, right, we let the market decide. So one way, I'm going to give you one example. We can use the moving average. So as the price climbs, your stop will follow while giving it space, giving it room to breathe so that we can protect our profits as it keeps going up. All right, so we kind of ride it, right? And we only exit when the market tells us it's over. All right, so let's say this. In a 4-hour time frame, the market quickly hits our first take profit target. Right, at this point, our first take profit target is met. So here's what we can do. We can close half of the position at there, right? And then now, how do we manage the other half? Right, so for example, right, we can add a 50-period moving average and then hold our position as long as the market does not close below the 50-period moving average. If the market keeps rising, the moving average will increase, right? So we only exit the trade when prices close below the 50-period moving average. This is where we exit the trade. And when we ride the trend, we are sitting on a fantastic profits, fantastic risk to reward ratio. 1, you got to master the market structure, right? You want to identify trends. In uptrend, buy setups. In downtrend, sell setups. In a range, we want to look at the support and resistance level for the play over there. Right? Number 2, you got to find the area of value. Right? So look for price reaction at the support and resistance level. It could be also moving averages or key levels, right? Before entering the trades. Number 3, use high probability entries. So for example, you can use candlestick patterns like the hammer, the shooting star, engulfing patterns, and force break setups for strong trade confirmation. These are like fantastic big money trades, right? That trades in your direction, in line with the bigger trend, right? And the last one, we exit smartly. We got to set stop loss beyond the key levels, look at it in zones, right? And then we set our take profit level before resistance or support level. And then you can also use trailing stops to ride the trends. So thank you so much for watching. If you enjoyed this video, please give it a thumbs up, right? It really helps to keep the channel growing. And if you are new here, don't forget to hit that subscribe button and turn on the notification bell so that you never miss an upload. So we also love to hear from you, right? Drop a comment below and let us know what you think or what you'd like to see next. I mean, your support truly means the world to us. It keeps us motivated to bring you awesome content every week. And if you're keen to learn more, I created a free 5-part comprehensive training where I show you exactly how I trade using my lifestyle method. Link in the description below.